Thank you, Haley. Hi, everyone. So my name is Michael Soper. I'll be presenting the top vendors positioned to capitalize on the convergence of TIS market growth catalysts today. Hopefully, I'll speak for only about 50 minutes and leave about 10 minutes for questions, but I'm sure I'll go over. So here's me. That is my email. If you guys have questions afterwards, you can also reach out through the function. So today, the presentation I'll be presenting on comes from our Telecom Infrastructure Services Global Market Forecast. This is a view of the telecom research coverage as a whole. And so you can see within the Telecom Infrastructure Services, or TIS portfolio, we have the global market forecast, the North American market forecast, and we produce a quarterly TIS benchmark as well. Before we get started, I'd like to do a level set, if we can, on what exactly is in our TIS taxonomy. So this includes all external spend, both CapEx and OpEx, on services by CSPs. And for the purposes of this report, CSPs includes telcos, cablecos, and hyperscalers. One note on the hyperscalers. The data that is presented in this report includes only the following 6 hyperscalers: Microsoft, Alphabet, Meta, Amazon, Apple, and Rakuten. We consider these hyperscalers to be kind of the tier 1 in terms of telecom-related spend. So we segment the TIS revenue into deployment services, maintenance services, professional services, and managed services. And then we do breakdowns in other segments as well. And so you'll see that through the course of the presentation. Okay, so let's begin. What we saw in 2021 is the TIS market entering a period of sustained growth. What we had was rising investment in 5G in several key large markets, enabled the TIS market to really recover swifter than expected from the effects of the pandemic. And this has launched a period of growth that will extend at least through 2026, which is the end of our forecast period. So during this time, there are a few key growth drivers and key growth detractors that I will try to run through at a high level in a minute, and then we'll touch on all these things throughout the course of the presentation. One of the key growth drivers is the government stimulus, and that will begin to have an outsized effect on TIS spend. We're seeing broad mandates from governments across the world to roll out 5G for economic and national security reasons. They're also interested in replacing a lot of the existing gear in the telecom networks with that from trusted vendors. And they're also interested in bringing the broadband internet speeds to both underserved and unserved areas. One of the other major growth drivers is the hyperscaler investments. Hyperscalers are expected to increasingly encroach on the connectivity space and their spend on not only the optical domain, which is where their traditional telecom-related spend has been focused, but they're also increasing their investments in access-related projects. We'll also see some risk factors entering the market, especially over the last 6 months or so. So this will help drive down lower TIS spend volumes late in the decade, and also will weigh on growth over the next, in the near term. And that's why you're seeing the growth curve come down from quite strong in 2021 to much weaker growth over the next several years. Some of these growth detractors we're talking about are legacy decommissioning, the relatively high debt levels that the telcos and cablecos have on their balance sheets, and of course consolidation with tier 1s snapping up tier 2 and 3 telecom operators. So quickly, we can go through the growth drivers. We kind of touched on the 5G rollouts, especially C-band in the U.S., India's eventual 5G build, which will get started later this year, but not have a massive impact on spend. We have, of course, China's 5G build-out is ongoing, but TIS spend on those projects, which are still in the coverage phase, shifting to the capacity densification phase this year. It will peak in 2022, and then we'll see significant drop-offs over the next several years in China. We also have hyperscaler investments, which we touched on, and edge compute infrastructure build-outs, which involves both the hyperscalers and telco cableco customer segments. Digital transformation-related projects are a key driver of professional services spend over the forecast period, and that is also supported by government funds, as governments are interested in ensuring that the telcos and cablecos, you're protecting their national security-related infrastructure. As we talked about, government stimulus, infrastructure swaps, largely swapping out China-based vendors, and that's largely going to Ericsson and Nokia, that business, and then initiatives to close the digital divide. There are also several greenfield network builds across the world, one in Germany, Rakuten's mobile network build in Japan is ongoing. We have Dish's network build, of course, in the US. And then there's possibilities for some of the cable cos in the US to become more facilities-based mobile network operators rather than just the MVNO side that they're really relying on right now. Growth detractors over the next several years, we have CSP restructurings, bankruptcies, and consolidation. And that's a lot of that is linked to the interest rate normalization that's going on right now. Of course, central banks are raising their interest rates to combat inflation, and a lot of the telcos have quite high debt loads. It will be more difficult for them to service their debt as interest rates rise, and so with that, we'll see bankruptcies. We'll see tier 2 and 3 operators seek to be acquired by some of the larger tier 1 operators. In the 5G cycle, we're also seeing a lot of reuse of the existing site grid. The 4G sites are being leveraged for 5G. There's less need for services such as site location and construction than in previous generations of mobile networks. Over the course of forecasts, we'll see an increasing impact of cloudification of the network. White box gear will be going out into the field more often, and there'll be lower spend relative on that gear in terms of installation than proprietary integrated hardware software from traditional vendors. Automation, AI, ML, that will have a significant impact on the maintenance market and managed services. There'll be less emphasis on labor resources, so the TIS vendors will be able to save money, but that will in turn be translated to the CSPs will be seeking to pay less for these services. We touched on legacy infrastructure rationalization and decommissioning. That's, of course, an ongoing trend as 2G, 3G, and eventually 4G will be, some networks will be decommissioned over the course of the forecast period. 4G more so later in the decade, if at all. And then this year, there's quite an impact from the chip shortage, other supply chain related challenges like shipping delays. We've also seen some standards delays and spectrum auction delays tied to the pandemic. These things are starting to normalize at this point, but they've certainly had an impact on 5G development in several markets. Okay. So with that, I'll go into each of the service segments. Let's start with the deployment market, which is the smallest of the 4 segments. So we have the deployment services market growing, and that's largely due to 5G RAN, other related infrastructure rollouts in key large markets. This growth will occur throughout the forecast period, early on supported by China's aggressive 5G RAN rollout, which, as I said, peaks in 2022, and then U.S. C-band rollout peaks in 2023. We do, however, expect spend levels in the U.S. to remain relatively elevated compared to historical levels, and that's largely due to government funds flowing into the market for things like, serving the underserved with broadband internet and swapping out infrastructure at the Tier 2 and Tier 3 operators that had previously leveraged Huawei for either GPON or optical transport and some of their LTE services. The deployment services market, of course, will also benefit from India's 5G rollout, and that's really going to hit the forecast in 2023 in earnest, but will occur over several years. Of course, the 5G investment is also driving spend on TIS for other infrastructure domains, such as optical transport. There's quite a refresh going on in terms of front haul, mid haul, and back haul. There's also edge infrastructure being built out and core networks being refreshed as well. We also foresee fiber deployment remaining relatively elevated as the broadband services are extended to new areas. Of course, a big issue going on this year is the short-term effects of the chipset shortage and other supply chain disruptions. So that's why we have a bit of a dip in 2022 growth in deployment services, followed by some recovery over the next couple of years as inventories are built back up. In the later years of the forecast period for deployment services, we will see some mitigating factors in terms of growth, and that's the consolidation that will occur, increased deployment of Open vRAN, which has far greater installation costs, far lower installation costs. While the professional services spend, of course, will be higher with Open vRAN, we predict that the Open vRAN spend on deployment will be much lower. We'll also see lower demand for site location and construction. A lot of the hyperscaler spend will be able to offset these trends and allow the market to continue to grow. In terms of the maintenance market, so the pandemic and several other factors have kind of delayed a lot of the decommissioning efforts that CSPs wanted to undertake. And so that's kind of pushed out the timeline for where CSPs can kind of achieve some cost savings from shutting down their legacy networks. So with that, we foresee a lot of CSPs maintaining both their 5G and legacy networks over the course of the forecast period, which drives growth in the maintenance market at least through 2025. In total, however, the maintenance services market is under the most threat from underlying trends like automation and AI/ML, as well as the new network architectures that employ cloud more heavily. These trends are going to have quite a significant impact in the latter half of the decade beyond the forecast period. Professional services will be the fastest growing TIS segment. A lot of that is due to network infrastructure integration that's occurring along with 5G rollouts. And then digital transformation related endeavors that the CSPs are undertaking over the next several years. We also see a lot of complexities coming along with the new technologies, cloudification of the network. So this is going to cause project costs to be quite high compared to historical levels, especially in the last 2 years of the forecast period. And then that will only increase over the course of the decade. So this is codified technologies, open vRAN. As these are deployed at greater scale, we'll see professional services spend continue to rise. So just a quick note on the network infrastructure integration spend. We're seeing that move in step with the 5G deployment timelines in key markets like the US, India, and China. So we're also seeing spend on that, network infrastructure integration occur with edge compute environments, and that's being done for telecom and cable operators as well as the hyperscalers. One of the other key subsegments of professional services is OSS/BSS systems integration. We expect that to remain in high demand throughout the course of the forecast period, especially as 5G cores are adopted, network slicing services are introduced, and more automation is proliferates throughout the network. In terms of the managed services market, we've seen in 2021, we saw a significant growth uptick in the managed services market after a down period in 2020. That was largely due to the winding down of the Sprint outsourcing contract after Sprint was acquired by T-Mobile. So with that off the books, 2021 was able to grow quite well, and TBR expects that growth will be sustained through the forecast period. A lot of that is due to vendors providing CSPs with access to things like subscription services that help them gain new insights and cost savings on their networks via AI, analytics, automation, new software introduced into the network like that. In addition, we also see CSPs relying more on vendors for their expertise and access to new platforms that can help drive business outcomes more effectively. We're also seeing an increasing trend towards outtasking OSS/BSS, and this is helping companies like CSG and Amdocs continue to grow their revenue. We're also seeing more outsourcing of security and applications so that the CSPs can focus on their core businesses. So all of that is what we consider to be outtasking services within managed services. One of the negative pressure points on the managed services market will be the network outsourcing spend. CSPs are increasingly either insourcing some of their network operations or they're finding less expensive third-party vendors to do that type of service. And so this is driving down their spend on full traditional network outsourcing, where the CSP will transfer employees over to a vendor. And this is just fine for the vendors generally because the margins on that type of work were very low, and we saw several vendors over the last several years really reduce their exposure to that network outsourcing market. Certainly Nokia and Ericsson are the first ones that come to mind there. So we'll dive deeper into each of these customer segments, but just to quickly give a high-level view on these. So what we have through the forecast period is government stimulus supporting telco growth and kind of mitigating the declines in cable co spend over the course of the forecast period. But throughout the forecast, we have hyperscaler spend growing quite steadily, much faster than the telcos and the cable cos, as they increase their exposure to telecom industry, especially new initiatives within the access layer of the network. Their traditional spend has largely been confined to the optical layer, but we do expect that to shift a bit over the forecast period. So we'll dive into each of these customer segments. So first, going into the telco market, telco TIS spend is expected to grow through 2024. And this primarily tracks with the 5G coverage deployments in large markets. We're also seeing quite a bit of support coming from governments to fund both 5G initiatives and serving the underserved and replacing equipment from China-based vendors with more trusted vendors. Typically, we would not see in the course of a RAN deployment cycle, typically we wouldn't see such a long growth horizon in the TIS market, but a lot of the growth is due to the unprecedented government stimulus, and that's helping support the deployment of new infrastructure. And that will be both for 5G, providing access to broadband services, whether that's through 5G, fixed wireless access, fiber, or other means, leveraging satellites, things like that. In 2026, however, we do see the combination of post-peak 5G deployments in some of the largest markets, China, U.S., India, as well as some of the other growth detractors that we talked about early in the presentation, industry consolidation, legacy rationalization, cost savings from AI, ML, that will result in declining spend in this customer segment. One thing I want to note about the legacy infrastructure for the telcos is that as it's decommissioned, it will be replaced with the new architecture technologies, virtualization, cloudified applications, leveraging more automation. So this is going to occur in the core network, the access layer, and this will manifest itself in things like Open vRAN, and that will drive lower spend on some of the hardware attached services like maintenance and deployment. We can discuss the cableco market. This is a much smaller segment of the market and is generally the cableco market is generally in a gradual period of decline. We don't foresee many growth catalysts on the horizon for the cableco market. They are engaged in quite a bit of consolidation. They are watching the erosion of their TV subscribers play out, and they're also coming off an elevated spend cycle, upgrading their wireline networks to DOCSIS 3.1. So that investment cycle is wound down, and we're seeing these growth detractors, the TV subscribers declining, industry consolidation. All of this was kind of exacerbated by the pandemic, and that's causing the cablecos to reduce their TIS spend over the course of the forecast period. Some of this decline will be mitigated by the government funds, especially in the U.S., for cable companies to build out footprints to unserved, underserved locations, provide more competition in certain markets. But it will not offset the overall impact of the growth detractors. As I noted earlier, there's also potential for some greenfield wireless network builds by some of the operators like Comcast and Charter, but these will be relatively small in scope, these deployments, and not have the same TIS spend intensity that we're accustomed to from a tier one like Verizon or AT&T. There's also some spend coming from cablecos for edge computing and digital transformation, but we do believe that the cablecos have largely missed out on the opportunity to capture value from the edge compute market, with most of that value going to the hyperscalers and then the telcos. One of the other growth detractors for the cableco market is that they have largely decided not to overbuild with fiber and are instead kind of content with their networks as they are and just enhancing them as we go forward to provide higher speeds. So they're not really indicating that they will future-proof their networks, if you will, at this point. One note I'd like to make is that Dish Network is included in the CableCo GIS market forecast. Perhaps once their network is fully built out and operational, we'll move them over into the telco bucket. But for right now, they're in CableCo. And so they're certainly spending quite a bit on TIS, helping prop up this market. But it's only a partial overall offset in the market spend. Dish's network is cloud-based, as you know, so it's not quite as spend-intensive as a traditional network build. So with the hyperscalers, their growth is quite robust over the course of the forecast period. A lot of that is due to ramping spend in the access layer, but overall spend volumes at this point, at least in the near term, will remain underpinned by their optical investment for data center interconnect infrastructure. We also have Rakuten's mobile network build in Japan. That's been a major driver of hyperscaler TIS spend. That is not intensifying quite as much anymore. They have most of their network built out, at least their LTE network. And so their spend will be coming down in the next couple of years. However, we do see Alphabet, Amazon, Microsoft pursuing 5G and edge compute opportunities throughout the course of the forecast period, and they'll be ramping up spend on that. As I mentioned, a lot of the hyperscaler TIS spend has mostly been tied to submarine and terrestrial optical transport, especially for data center interconnect. They are embarking on endeavors in mobile core, providing more backhaul and other access-related investments. They're quite interested in moving into more of the network ownership role to help drive their cloud and digital businesses. And I would encourage everyone to check out Chris Antlis, the principal analyst in our telecom group, did a webinar on the hyperscale market landscape a couple months ago, and also check out that report. It deep dives quite a bit into the telecom-related initiatives going on at all of the hyperscalers. So one note about China's hyperscalers, they, especially Alibaba, Baidu, and Tencent, so they are not covered in the scope of this research, and that is largely due to China's state-owned telcos, so China Telecom, China Unicom, and China Mobile. They're being set up by the government to capture the 5G opportunity. So hyperscalers are largely going to have to leverage the telcos investments for their own initiatives in edge compute or 5G or what have you. Okay. In terms of Geo Trends, let's start with North America. North America rebounded quite strongly in 2021. That is largely due to the accelerated C-band rollouts. We're seeing over the course of the forecast period a higher degree of spend than in typical mobile access deployment cycles. And that's largely due to the drawn-out 5G spectrum auction progression in the U.S. So that's really elongating the duration of the U.S. build 5G. So we see C-band deployments occurring en masse through 2023. There will be some hiccups this year due to chipset shortages and other supply chain issues. And that's contributing to the drawn-out cycle as well. We would typically see a larger drop-off in 2024, 2025 after the C-band coverage build-outs are complete. But instead, we have government stimulus flowing into the market, especially in the U.S., throughout the forecast period. And that's going to be funds for ripping and replacing equipment from China-based vendors and for fiber and fixed wireless access rollouts to help close the digital divide. So within the U.S., CSPs ended up estimating that they're replacing Huawei and ZTE gear is going to cost several billions more than the original $2 billion allocated by the government. But it looks like the government is going to appropriate the additional funds, so the CSPs won't have to worry about covering that on their own. Canada is a bit of a different story. So there's a slight lag in Canada in terms of 5G and edge deployments. But the telcos have kind of focused their 5G deployments on the metro areas, but they're building out coverage and capacity as more spectrum comes online throughout the course of the forecast period. One note on Canada is that the government has indicated so far that they will not pay for the replacement of Huawei equipment in operator networks. And so the CSPs will have to front that themselves. So that could be a bit of a hindrance for them embarking on other high TIS spend projects in the course of the forecast period. Moving on to Latin America. So CALA staged a pretty good recovery from the severe negative impact on CSP spend caused by the pandemic. We do note, however, that the region still has these underlying economic, social, and political challenges that existed before and continue to exist after the pandemic. So this forecast could be significantly disrupted by some of those issues coming to a head. A lot of them are tied to some of the macroeconomic challenges that the world is facing: currency debasement, inflation, high debt loads within the government sector, and within the CSPs. Right now, the CSPs, they've resumed their LTE deployments. There's some 5G deployment, there's some core modernization, and there's digital transformation projects occurring, especially in the large markets like Brazil and Mexico, and with the operators that are headquartered in Europe but have significant footprints in Latin America. In EMEA, it's a bit of a different story between Europe and the Middle East and Africa. In the EMEA economies, they are significantly impacted by the regional political disruption that is ongoing. We do expect sustained low-level growth throughout the course of the forecast period, however, and that's largely due to some LTE investment and hyperscaler investment in Africa, as companies like Google, Microsoft, and Amazon try to get an early foothold in the burgeoning edge compute and cloud market in Africa. Some of the more developed Middle Eastern countries like Saudi Arabia and UAE, their 5G investments, they've already done quite a bit there. And so there's a bit of a drop off at this point, and 5G investment is going to spread to some of the less developed markets later in the forecast. Over in Europe, we do see Europe as having entered a sustained period of growth. They've overcome some spectrum allocation delays, a somewhat hostile regulatory environment, confusion on CSP consolidation, and they're able to grow spend over the course of the forecast period. A lot of that is due to government spending, which is for swapping out gear from China-based vendors and other stimulus that emanates from pandemic relief packages. And then, of course, the CSPs will also continue their 5G coverage rollouts. What's different in terms in Europe in terms of 5G coverage rollouts when you compare to China or the US is that they're not occurring en masse. They're much more staggered. There are plenty of laggard markets. There are plenty of early adopters, and then there's some in the middle. One other thing that Europe is emerging to take the lead on is open vRAN, especially companies like Vodafone. They're looking to diversify their supplier pool or put pressure on existing suppliers to lower their prices. And so this could end up placing some downward pressure on product-attached TIS prices. We do note, however, that this is likely to have somewhat minimal impact prior to 2025. And open vRAN, if deployments do occur en masse, is likely to occur beyond the forecast period. Okay. I'd like to discuss the CSP tiers. So a tier 1 CSP, the larger CSPs with over 50 million mobile connections, we do include the hyperscalers in the tier 1 CSP category, just so everyone is aware of that. One of the big trend we see going on among the different tiers is how interest rate normalization, which we discussed earlier, will drive many of the tier 2 and tier 3 operators to either restructure or file for bankruptcy or seek acquisition by a tier 1 operator. So we do foresee tier 1 CSPs participating quite aggressively in consolidation of tier 2s and tier 3s. And this is going to occur at an accelerated pace during the forecast period as inflation persists, interest rates continue to normalize, and tier 1s see opportunity to increase their subscriber bases and prevent themselves from being disrupted too heavily by hyperscalers. Tier 1 CSPs, of course, will grow their spend in things like 5G, edge computing, and digital transformation. And they're also increasing their spend to ward off the encroachment of hyperscalers on the telecom market. One note about the tier 2 and 3 CSPs, and this is especially a US-centric statement, is that in the short term, these operators, they're going to be supported by government funds for several reasons. So the government wants to preserve high levels of competition in wireless and broadband. These are, these companies are also the ones that deployed Huawei and ZTE gear in their networks, and so that needs to be ripped and replaced. And a lot of these operators have extensive operations in rural areas, and so that's where the government comes in and provides money to help close the digital divide. We do think these funds are kind of more of having a Band-Aid effect on the tier 2 and 3 operator, and that their spend will enter a sustained decline after 2023. The reason that there's growth for tier 2 and 3 operators in 2023, is that we see the tier 2 and 3 operators in 2022 having a real negative impact on the chip shortage. Suppliers are going to be prioritizing their larger customers, their tier 1 customers, rather than the smaller tier 2s and 3s. Okay. So in terms of market share, we're seeing Huawei and ZTE suffering some share declines, and that's this is market share among vendors, I should note. We're seeing Huawei and ZTE suffer share declines due to geopolitical challenges, and these will be ongoing. Nokia and Ericsson so far have been the primary beneficiaries of this, but we certainly think Samsung is also going to benefit, especially as they prove themselves over the course of their lucrative Verizon contract. And then also some of the rest of market suppliers, the smaller open vRAN based suppliers, as well as the vendors that are creating the hardware for those open vRAN networks. So we're talking NEC and Fujitsu, especially in that market. Okay. So a note on those companies in the rest of markets. So the TIS market is highly fragmented. There's quite a few global, regional, and local players, and they're all addressing various domains within the network. And they're all going to, there'll be some shifting in prominence over the course of the forecast period and in the later part of the decade, especially as open vRAN proliferates, the white boxification of networks takes place. So we're going to see more third-party services contractors, kind of the infrastructure general contractors, which primarily provide deployment, rising in prominence because they can do more of the lower level infrastructure installation work as the gear is simplified and the intelligence moves further away from the gear and out in back into a central or edge data center. Another company to note is the Ict Odms. So these are companies like Foxconn, Celestica. They're going to be making a lot of the white box gear. They can provide support and maintenance services on their hardware, but their services organizations are highly immature, if they exist at all, and they're not too much of a threat at this point in the TIS space to the incumbent vendors. The incumbent vendors, the ICT OEMs, they are, however, threatened by the ICT systems integrators. So these companies will, as the operators, look to leverage, a greater number of suppliers within their networks. They'll need systems integrators to kind of pull it all together, especially with the codification of networks. These ICT SIs have quite a bit of experience working in data centers and working with the hyperscalers, which kind of popularized the trend. And so the ICT OEMs will be disrupted by this trend. So some of the key takeaways I'd like everyone to get out of this presentation is one, the government support enables the telco TIS spend growth through 2024. It's a longer 5G cycle, largely supported by the government support. We would typically see lower spend following a new RAN cycle, and instead it's extended longer into the forecast period. Keep in mind some of the geographic spending trends and the geopolitical headwinds that portend further share declines for Huawei and ZTE, and conversely, share increases, at least outside of China, for Ericsson, Nokia, and Samsung. Third, Open RAN's impact has been delayed. So we pushed out the timeline impact for Open RAN on the TIS market. I think we've seen some more complexities come to the fore over the last year or so, which is making it look like a longer time to maturity for Open RAN than we had previously expected. There will be a larger impact, especially on the professional services side of the business beyond the forecast period. Fourth, the Tier 2 and Tier 3 operators, they're highly threatened by the rising interest rates. They will need to consolidate and or bankrupt at an increasing rate over the next several years. And last, hyperscaler spend will increase in the wireless access domain, but the suppliers that will capture the value there are unlikely to be the traditional players. So the suppliers that are positioned well there are the ODMs, which already make the white box equipment for the hyperscale data centers, and then the ICT systems integrators that integrate that equipment and software. And with that, Haley, we can open to any questions.
Awesome, thanks, Michael. Folks, if you have any questions on the presentation, feel free to take a moment and put them in the Q&A box. We'll wait for a second to see what comes through.
All right.
All right, it doesn't look like there's any questions coming through right now. If any of you do have questions that come up at a later time, feel free to reach out to Michael directly. His email is on the slide here. Also, if anything comes through as we're finishing up, we will pivot back to questions. If you have a few moments, it would be greatly appreciated if you could fill out the survey on your screen. That helps us create webinars like this for you. A replay version of the webcast will be available after the event and will be sent out to you via email. To view a list of our upcoming and past webinars, please visit tbri.com and be sure to join us on Thursday, June 30th for top priorities for IT infrastructure investments. What's more important than business transformation? Thank you all and have a great rest of your day.